Well, speaking about record tech profits, let's turn to Apple. It's been overshadowed a little bit this week as we've been talking about this AI arms race, with the focus, of course, being on Microsoft and Alphabet, as we have been discussing. But Apple, still a huge holding by many investors on the institutional and retail side. What should investors be doing with it? How should they be trading it? Let's get to Neuberger Berman senior research analyst Dan Flax, who covers all things tech. Dan, it's good to see you. Thanks for being here. We were just talking about the big profits of many of the tech companies, of course, Apple included. I guess I would segue, first of all, by asking about AI, since that is the hot topic this week that we've been talking about. Does it matter that Apple is kind of sitting back on this while we're seeing a big search fight when it comes to generative AI?
Good morning. Great to be with you, as always. Artificial intelligence is a transformational technology that's impacting and really providing opportunity across a broad range of areas. Certainly in search, as you were talking about, Google is a leader there. We'll see how Microsoft does with Bing as it integrates ChatGPT. Apple infuses AI throughout its products as well. And so one really has to look at where companies are able to add value. But if we step back, I think each of these companies, and Apple in particular, it's really about innovation. It's about execution on their product cycles, delighting customers. And if they're able to do that in the case of Apple or Google or Microsoft, I think they'll be able to create additional shareholder value over time.
Isn't the huge thing around this, though, the amount of market share that could be shuffled around and how much that would impact where the current advertising makeup of revenue and profits that come in currently are?
If we look at Google, part of what they've been able to do is deliver a great service to their users on the front end. Search, Maps, Gmail, they have a variety of different assets and platforms. And then on the other side, they're able to deliver a lot of value to advertisers. And when we speak to advertisers, what has continued to be a theme over the last several years, and I suspect over the coming years, is that the ROI, or the return on investment from advertising on the Google platforms, is very, very high. And so if Google is able to do that, I think they're going to be able to maintain an outsized share in search. I would emphasize, though, search is continuing to evolve. There's more visual search with the camera. All of us are benefiting from advances in search around predicting what you want to do or what you're looking for. So in many ways, as big as search is, I think the next several years we'll see a whole wave of new innovation. I think Google can capitalize on it, and we're certainly watching how Microsoft does carefully.
Dan, Brad and I, after Apple earnings last week, we hopped on live in our After the Call show in the evening, and we were talking about just how bad this conference call was, and the company did not do well. What have you been doing with the stock since then? And then what do you think the setup is until them, in front of them potentially coming out with a really big buyback announcement this spring?
I continue to like the stock at current levels. The December quarter was impacted by some of the challenges in China around producing iPhone Pro and Pro Max. Clearly, there are cyclical headwinds that are intensifying and impacting Apple and other companies. But if we look to what they said about the March quarter and then think about the next several months, the devices remain incredibly valuable to customers. What's going on across the company is they're innovating in iPhone, Mac, iPad, wearables. Services remains a very, very interesting business and continues to grow. And so I think what will matter over the next several months and into the balance or late this year and into 2024 is we'll see growth improve. It's going to be driven by innovation, execution on the product cycles. If they're able to do that, even in the face of what is, of course, a challenging environment, I think Apple can create additional shareholder value over the next 1 to 2 years.
Dan, I want to ask about Apple TV Plus in particular. Unusually, Apple feels like an also-ran in this category. Is it worth it for them? What do you think they're trying to achieve, and what do they need to be achieving in that area?
I think what they're doing is trying to be very deliberate about the strategy. Insofar as the revenue impact, it's relatively small. But when you think about TV or great content, in the case of Apple TV Plus, they have shows like Ted Lasso, which of course have been incredibly popular. Part of that helps to deliver value to customers in new ways. It helps to retain customers. I think it strengthens the overall ecosystem. Apple is doing more with soccer, Friday Night Baseball. And so they have a role to play in delivering content and really tying it together in the broader experience, which is about integrating hardware, software, and services and delighting customers. So it's smaller relative to some other players, but they have a different business model.
And in terms of business models, we just heard from Disney this week, and it sounds like them spinning off, or not spinning off, well, spinning off ESPN is off the table as of right now. However, it's going to be its own business unit, and naturally, a lot of people think about what the content licensing may look like going forward here and what that could do for another company you cover, Netflix. Do you believe that Netflix needs to pay for any content that it could get its hands on in the sports category in order to see that next leg of growth for its own subscriber base?
I think Netflix has been delivering great content. I expect they will continue to over the next several years. Sports is an area of interest for them, as it is for many other companies. I think for Netflix, it's going to come down to continuing to deliver great content. We're seeing them make some progress in the advertising tier, and further out, will they be able to innovate and deliver value in areas like gaming? I think relative to Disney, Netflix is certainly just focused on video. Disney has a number of franchises, a tremendous amount of content. You mentioned sports, which is obviously valuable. And I think with Bob Iger's return to the company and bringing a level of focus around profitability, continuing to nurture the culture of creativity, I think that his strategy will pay dividends for Disney shareholders over time. But certainly, I do not view this as a winner-take-all market. I think many companies can participate broadly in the video growth opportunity.
Neuberger Berman, Senior Research Analyst Dan Flax joining us today. Dan, thanks so much for the time this morning. Appreciate it.